So if you woke up this morning, September 16th, 2025, you've probably already seen the headlines.
Oh, yeah.
Rocket Lab stock is taking a real hit today, plunging, what, over 10% in early trading?
Yeah, quite a dip. It's really a textbook clash, isn't it? Short-term market jitters versus a pretty bold long-term strategic gamble.
Absolutely. And that's what we're going to dig into today. We want to unpack why Rocket Lab stock saw this immediate drop.
Right. We'll connect that raw market reaction to the company's really ambitious strategic vision. They want to be an end-to-end space company.
And then zoom out a bit, look at the bigger picture, the whole aerospace and defense landscape that's kind of shaping their path.
Exactly. Our mission today is to understand the catalyst, the ambition, and, well, what it all means for you watching this unfold.
Okay, let's get into it. The immediate trigger, the news that really sent ripples through the market this morning, was Rocket Lab announcing an at-the-market equity offering program, an ATM.
Precisely. And at the market, or ATM offering, it's essentially a flexible program that lets a company sell new shares directly into the market.
But not all at once.
No, not necessarily. Over time, at prices and moments they choose, through agents they nominate, Rocket Lab specifically announced a program for up to $500 million in new shares this way.
So it's like a faucet they can turn on and off, not a flood.
That's a good way to put it. Strategic control over the flow.
Okay, but still, $500 million is a significant chunk of change. So why are they doing it now, and what's this money actually for?
Well, Rocket Lab's been quite clear on that. These funds are earmarked for strategic growth initiatives.
And the main one we know about is...
The planned acquisition of Minoric. They're a laser communications provider. The deal's got an initial price tag of $75 million, plus potentially another $75 million in earnouts based on hitting certain milestones.
Right, Minoric. And this is where it gets interesting, because that announcement, coupled with the ATM, immediately sparked those concerns about dilution. That's what led to today's 10% drop, right?
That's the immediate connection, yeah. Many investors just see new shares and think, okay, my piece of the pie just got smaller. Dilution.
Is it really that simple, though? I mean, for a company growing this fast, isn't dilution sometimes just the cost of doing business? Or should they have waited?
That's the core debate. Dilution is the main concern here. It's the reduction in ownership percentage for existing shareholders when you issue new stock.
And people are looking at the current price, like around $48.55 today.
Exactly. And comparing it to previous highs, maybe mid to high $20 way back, arguing that selling shares now means they have to sell more shares to raise the same $500 million.
Which means more dilution than if the stock was higher.
Correct. It's a valid short-term pain point, no doubt about it.
And this timing thing has lit up the online forums, hasn't it? Like
Right.
Reddit, you see one camp saying, bad timing, the market's tanking. Right.
Right, that's one perspective. But there's another equally vocal camp arguing it's actually perfect timing from Rocket Lab's point of view.
How so?
Well, the argument is, for a pre-profit growth company like Rocket Lab, raising capital when you need it, even in a volatile market, is smarter than waiting for some hypothetical peak that might never come.
Secure the funds now for the long-term plan, regardless of the day-to-day market swings.
Precisely. It really highlights that fundamental split between, short-time traders looking at the day's chart and long-term investors betting on the strategy.
And it's important to remember, like you said, an ATM is just an authorization. It's not an immediate fire sale.
Exactly. They don't have to sell all $500 million today or tomorrow. They could potentially wait for a market rebound to actually sell the shares. It gives them flexibility.
Okay, so let's talk about the why behind Minoric itself. It's not just any acquisition, right? There's strategic logic here.
Absolutely. Minoric provides laser communications. They've got, by most accounts, really sound technology. But critically, they kind of struggle to get product out the door.
Ah, so good tech, but maybe execution challenges.
Seems that way. Which makes them an ideal target for a company like Rocket Lab, which has shown it can build things, integrate tech, and scale up production.
And this gets them into communication satellites, that whole area.
Yes, and that's key. Commsats are arguably the largest total addressable market, the biggest potential market for space applications right now.
So Minoric helps them build out capabilities to support maybe customer constellations with a sort of shared data link constellation, like an internet backbone in space.
You've got it. It's a crucial piece for their bigger vision.
Which is this end-to-end space company idea. So the Minoric deal, the ATM offering, they're not just isolated moves. They fit into a much grander strategy.
Exactly. The big picture is Rocket Lab aiming to be fully integrated, an end-to-end space company.
Meaning,
Meaning they want to control the whole value chain, designing components, manufacturing them, building satellites, launching them, and then, crucially, providing the data services those satellites generate.
wow, okay. So that vision rests on what, a few core pillars?
Three main pillars, really. The first one is what everyone knows them for: launch services.
Powered by Electron.
Right. Their small lift workhorse. It's got an amazing track record, over 50 successful missions, something like a 93% success rate.
And they launch a lot.
They do. 16 launches in 2024 already, over 35 in the backlog. That makes them the second most prolific commercial launcher out there year after year. Consistent reliability.
Okay, incredible launch cadence. But Electron, great as it is, isn't enough for this whole end-to-end dream, is it? It's small launch.
No, definitely not. Which brings us to pillar number 2, space systems. And this might surprise some people, but this division is already their main revenue driver.
Really, more than launch.
Yep. 73% of their revenue year-to-date through Q3 2024 came from space systems. They're not just launching stuff, they're building stuff.
What kind of stuff?
4 main spacecraft platforms: Photon, Explorer, Pioneer, Lightning. And they've vertically integrated their supply chain for critical parts like radios, solar cells, star trackers.
They make the components and the satellites.
That's the idea. They've got over $720 million in spacecraft programs booked, more than 40 satellites in their production backlog right now. They're basically becoming a factory for space infrastructure.
Okay, so they build the satellites, they launch the satellites, which brings us back to Mynaric and where that fits in. Pillar 3.
Pillar 3, the final frontier for them: data applications and owning their own satellite fleet. This is where Mynaric slots in perfectly.
And this is where they start looking a bit like SpaceX and Starlink.
You've hit on it. They aim to own and operate their own satellite constellations, selling the data, generating high-margin recurring revenue.
Just like the Starlink model, but maybe for different applications or customers.
Potentially, yes. And the market size here is just staggering. The forecast for satellite data applications is something like $320 billion by 2030.
Wow. Compare that to launch.
Launch is maybe $10 billion, space systems maybe $20 billion. Data applications dwarf them. That's where the really huge long-term value potential lies.
Okay, but to build and deploy your own massive constellation, you need more launch capacity than Electron offers.
Exactly. Electron is great for small sats, but not for deploying hundreds or thousands of your own.
And that's where Neutron comes in, the big one. This feels like a critical, almost make-or-break piece of the puzzle.
It absolutely is. Neutron is Rocket Lab's next-gen, medium-lift, reusable rocket. It's designed to haul up to 13,000 kilograms to low Earth orbit reusable configuration.
Which is prime real estate for constellations.
The prime real estate. And its role is twofold: mass deploy their own constellations efficiently, and also serve larger external customers, maybe grab some of that Falcon 9 market share.
So it's built to compete directly.
Yep.
Head-to-head with Falcon 9.
Oh, yeah. For larger satellite operators, even for Department of Defense missions, they're targeting a price point of $55 million per launch.
Which is significantly less than Falcon 9's current price, around $70 million.
Right. And it offers a similar cost per kilogram, roughly $4,000. It's a direct challenge. Aggressive pricing.
Okay, aggressive. But how real is Neutron? Is it still mostly PowerPoint, or is it getting close?
It's very real. They're making tangible progress. They're aiming for a 2025 first launch.
Next year. Wow.
Yep. Initial hot fire tests of the Archimedes engine are done. The fairing assembly is complete, and the launch site construction down at Wallops is on track to be finished by the end of this year, 2024.
So things are moving.
They are. Rocket Lab calls Neutron its final major R&D push, and they expect it to drive company-wide profitability within just 6 months of starting commercial operations.
Whoa, hold on. Profitability within 6 months of Neutron flying commercially. That sounds incredibly optimistic, especially for aerospace.
It's definitely ambitious. It reflects huge confidence in their design, their manufacturing, their whole approach. The assumption is Neutron hits the ground running, achieves high cadence, high reliability, and starts grabbing market share fast because of that price point.
But the risks must be huge, too.
Yeah.
Any delay, any issue with a new rocket.
Oh, absolutely. There's significant risk, like with any brand new launch vehicle, but they clearly see Neutron as the key that unlocks their entire integrated vision. It really is the linchpin for the whole strategy.
Okay. So this big play, this whole end-to-end vision driven by Neutron, It's not happening in isolation. We need to look at the wider world they're operating in, right? The whole aerospace and defense sector.
Definitely. You can't understand Rocket Lab's moves without understanding the context. The global aerospace and defense, or A&D sector, is undergoing massive change right now. It's growing fast, but it's also being disrupted.
How fast is it growing?
Well, global defense spending jumped nearly 10% in 2024. That's the fastest rate in like 4 decades. And on the commercial side, forecasts say over 40,000 new commercial jets will be needed in the next 20 years. It's a huge dynamic market.
And what are these disruptive forces you mentioned?
Several big ones. First, geopolitical shifts, just ongoing instability around the world, governments getting really focused on industrial sovereignty, wanting to build things themselves. Rising trade tariffs are a factor too.
Like the reports about China returning Boeing planes.
Exactly, that kind of thing. It all fuels more defense investment and a focus on domestic or allied capabilities.
Which ties into supply chains, I imagine.
Directly,
Mm.
supply chain pressures. We're still feeling post-COVID disruptions, plus tariffs, export bans. It's all driving this demand for resilience, for agility. Companies and countries are looking at friendshoring, moving supply chains to allied nations, or just plain old reshoring, bringing production home. It's about managing risk.
Makes sense. And I hear there's a lot more money flowing into this space, too. Private money.
A ton more.
Yeah.
Increased competition and capital. The number of VC and private equity funds active just in the U.S. defense tech sector, it more than doubled between 2018 and 2024, from 233 to 576.
Wow. Where's that money going?
A lot of it is targeting defense tech startups, especially those working on dual-use technologies, stuff with both civilian and military applications, which sounds a lot like Rocket Lab's business, right? Launch, satellites, components.
Definitely dual use potential there. And all this activity, the money, the strategic shifts, does that mean more M&A? More deals like the Monarch one?
Absolutely. M&A activity is expected to increase in 2025, driven by all these trends. Companies are looking to position themselves, create value, especially in hot subsectors like space, cybersecurity, drones, AI. So Rocket Lab buying Mynaric, it fits right into that broader industry pattern.
So bringing it back to Rocket Lab specifically, this ambition, this expansion, Neutron, it all costs money, serious money. How's their financial health looking, especially after today's stock drop? Can they afford this vision?
Well, financially, they've shown tremendous sales growth. Revenue's been hovering around $100 million per quarter in 2024. That's way up from the $40–70 million range back in 2022, 2023.
Okay, good top-line growth,
Yeah.
but are they making money yet?
No, not yet profitable. They're still seeing quarterly losses, roughly $40–50 million. But importantly, their cash burn rate has actually slowed down this year through Q3, and they went into this with a pretty healthy cash balance around $500 million.
So the ATM offering wasn't out of desperation.
Doesn't look like it. It seems more like a strategic top-up. Raising capital to fuel that aggressive growth, especially neutron development and constellation build-out, in what is just a fundamentally capital-intensive industry. You need cash to play in this league.
Okay, so let's try and tie this all together. What does this mean for you, the listener? Watching Rocket Lab's stock plunge today, but hearing about this ambitious long-term strategy, how do we square that circle?
Today's stock drop is really, it's a stark reminder, isn't it? In these super high-growth sectors like space, a company's strategic vision often just smacks right into investors' desire for immediate returns.
Yeah, the short-term versus the long-term.
Exactly. Rocket Lab is essentially asking shareholders to accept some short-term pain, the dilution, for a chance at potentially much, much larger recurring revenue down the road. It's a big bet on that long-term value creation.
And they seem to be really leaning into their unique strengths to make that bet pay off.
They are. You've got their launch reliability that Cadence is second only to SpaceX. You've got the vertical integration, which is huge for controlling costs and supply chains, potentially leading to better margins.
And then this strategic push into the higher value data market, using Mynaric as a key piece.
Right. That's about fundamentally transforming their business model to capture a much bigger slice of this booming space economy.
But again, that kind of ambition, building an entire ecosystem, it doesn't come cheap.
Not at all. It requires massive investment, especially in R&D like Neutron. The whole point is to unlock profitability and grab a much larger market share eventually. But that takes serious capital. Today's ATM offering is just, well, it's a direct reflection of needing that fuel for the engine. It's the cost of building what they hope becomes a next-gen space powerhouse.
So today's market dip, it definitely raises questions. But it also really highlights this critical tension, doesn't it?
Hmm.
In an industry like space, so capital intensive, so strategically important, how do investors balance that immediate hit from raising funds against the grand long-term vision of building an entire ecosystem?
Yeah, is the price of that ambition always reflected accurately in just one day's stock chart? Or is there a deeper game being played here, one that only makes sense if you're looking years, maybe even decades ahead?
It really makes you wonder, is Rocket Lab playing checkers today, just reacting to market moves? Or are they trying to orchestrate a multi-year chess match across the entire space economy?
That's the multi-billion-dollar question, isn't it?
We encourage you to keep digging into these market dynamics, the strategies, and just the incredible innovation that's happening across the whole space sector. It's definitely a fascinating time.